Hello traders, welcome to the channel. 8% swing today on the SPY. You don't get to see that every day. So if we measure the bottom of today's candle to the top of today's candle, that's more than 8%. And if you look at the candlestick pattern of the past few days for the SPY, it looks like from this April 2nd candle to today, it looks like it's a free falling kind of pattern. And they say that you don't want to try to catch a falling knife. But today I actually caught one falling knife myself. Stick around and I'll share with you why I did that. This is for educational purpose only. This is not financial advice. One of the reasons that I think we are to have a relief rally soon is because if we measure from the all-time high of the SPY, which is here at about 613, and today's low, it's about 481. If you do a little calculation, the SPY has fallen more than 20%. So they say that if the market pulls back 5 to 10%, those are corrections. But if it pulls back more than 15, 20%, we're in a recession. There are different definitions of those, of course, but we're not trying to get into the details of those definitions. The point I want to make is that the market has already fallen a lot in a very short period of time. Of course, those are news driven. So, but even so, with 20% pullback, there is the relief rally is should be very close, maybe very soon. And then the other reason is that today, even though we opened low, but then at some point during the day, the market was over here above 522. That's like, I think it was over 3% in the green. No individual investors can have done that. So the push on the bullish side must have been institutional investors. So my interpretation of the candle today, even though it's not a piercing candle, it didn't even close to the bottom of yesterday's low. But my interpretation is that institution wants to get in and push the stock higher, but there is still some resistance. But I think that's a sign that maybe the institution they think that the market is about to bottom or maybe has bottomed. We don't know. But if the institutions wants to get in, and then they cannot, they will always leave a trace for us individual investors, so that we can spot them and we can just benefit, get out along the ride. So today I got the one stock or ETF I got in is XLF, the financial ETF. The reason for that, besides the 2 points I made earlier, is that if you look back in history, whenever the market has a pullback or correction or a recession, the financial sector, the Wall Street, they will always make sure that they get paid. So today I nibbled a small position on the XLF options. Of course, it has a long time before expiration. I actually picked up a NEEP call. So that's my reason behind why I try to catch this falling knife. But this is not financial advice, and I'm fully aware that there is a there's a chance that the market can keep falling. But based on my interpretation of the candle today, I got into the position, and then we'll see how it plays out. My guess is it won't go straight up tomorrow. Um, it could be best scenario is that it will consolidate some, maybe hopefully form a higher low, and then start the uptrend. That's the best case scenario. But if it doesn't work out, then my risk is actually pretty high. That's why I only picked up a small position. For me, my risk should be somewhere here underneath this candle. So that will be like over 4% risk. And the reward, we don't know. I don't know. I think the first resistance is about $46 area on the XLF. And then if you can take out that, then maybe to the 200 MA. And then if that, then fill this gap, which is also resistance um, in the past. So we'll see how it goes. And hopefully this video, you find some value in this video. Until next time. Bye for now.